Hi, I'm Kep Kepner, CPA here in Dallas. We're talking today about some clients and their tax issues. But today we're talking about a client I'll call Alias Joe. And Alias Joe spent all of his resources to buy a restaurant and really didn't have enough money to do all the things he needed to do to build his clientele and to make all the changes he needed to make. So the first thing he did was he stopped paying the state controller. And the state controller got wind of that because he wasn't filing sales tax reports. And what happened? They came in and said, either pay or we'll shut you down. Let me tell you this, the state controller in the state of Texas is a lot meaner than the IRS. They typically are not going to work with you. They may give you a few weeks to get paid up, but you better get paid up and you better file on time. So financing his business through not paying sales tax was a strategy he used, but it only lasted for about 4 months. Then in addition to having him pay up, they also wanted a bond to protect them. Turns out I was able to get that bond released, so now my client is paying his sales tax regularly. Now, one of the things I know, because we do accounting work for him, it looks to me like he's kind of underreporting his sales tax. And if he underreports, that's not going to be known typically by the state controller until they audit. And then when they audit, they can audit a 4-year period, and all those shortfalls are going to come up at one time, and the client is going to have to pay that plus penalties and interest. So maybe he's doing a little financing that way, maybe not, but the reality is the taxing authority is going to catch up with you. And if you took sales taxes from a customer and you didn't remit them to the IRS, that ends up being a personal liability on you. It's not just your company, it's on you personally. So let's say you go for 5 years and all of a sudden you owe $20,000 in sales tax. And you said, I've had it with this business, I'm shutting it down. Too much aggravation, I'm not making enough money. So you shut it down, that liability follows you, the owner. So you're not getting away with anything. So let's talk about the second way he decided to fund his business. The second way is he decided to not pay some of his payroll taxes. Now, the IRS is a little slow to catch on sometimes. So here we are now a year later, and they're ready to go in and take action, take everything out of his bank account, basically make sure that he is paying his payroll taxes. So that little gravy train is coming to an end. Now, unlike the state controller, the IRS will work out a payment plan. And it looks like my client has been paying his payroll taxes regularly in the last few quarters, but not before that. So he tried to finance it, and he's got the IRS on his tail. And now the IRS wants all kinds of information. He's got all kinds of expense facing him to gather financial information to give it to the IRS. And as we're doing this and as we're doing this video today, he only has 8 days to comply with the IRS request, or they're going to shut down his business. So this guy, this business owner, has tried 2 ways of financing, but the real issue is that he doesn't have enough sales. You can't save yourself into prosperity. You can't save yourself by shorting your creditors, particularly the state controller and the IRS, because they've got long arms and big clubs, so they can come after you. So let's examine his case further in the next video. Give us a call because we can help you.